Okay, hello my guys, welcome back. So today we have another video about the strategy. So on the screen what you're seeing here is what we call GBPJPY. Some people call it GJ, some people call it GBPJPY. Yeah, that is the standard definition, but it is the Great British Pound against the Japanese yen. So we're going to be going through it, and I'm going to be using the other strategy. So what I'm going to do, I'll just get my replay tool and select here. Let me enlarge it so that we can see well. So now the strategy is simple, like I taught it in the last video. I'm going to re-emphasize the strategy again. It is the alchemist strategy. Very simple, precise, and straight to the point. Or the only thing you need to do is wait. You wait until when what you want or what you know or what you see comes. When it comes, you execute the trade without any fear or favor. So I'm going to go through it, but before I start, guys, subscribe to the channel. We need to grow this channel to 100 subscribers. So far we have only 1 subscriber, so you can kindly subscribe to the channel such that I can be producing more useful forex content like this. If you do subscribe to the channel, you're really helping the channel. So I'll just give you a few seconds. You subscribe such that I can start. Okay, I was taking some water. So guys, go ahead and subscribe. A few seconds, you subscribe such that we can start. Yeah, subscribe to the channel. Okay, so we're currently on road to 100 subscribers. When you get 100 subscribers, I'm going to be giving out I'm going to be having a giveaway for the first first 2 subscribers. When we reach to 100, I'll get the first 2. Of course, whenever they subscribe, I note them down. When we reach to 100, I'll get the first 3 subscribers, and then I'll be giving them a giveaway. So guys, subscribe, and then after the video, if you have liked it, you can also like and share for the algorithm. Okay, so let's proceed now. So from the last time I taught you, if you still remember, we consider for the alchemist, we consider support and resistance. So our support and resistance is, one is the A support, and then we have the V support. The A support is simply the A formation is simply the resistance, and then the V formation is the support. How do we know that this is an A formation or this is a V formation? You come to the candlesticks first, and you see, when you see a green candle and a red candle, that is an A formation. When you see a red candle and a green candle, that is a V formation. V equals to support, A equals to resistance. So how do you know that this is an A? Come to the line chart. You see the green candle and red candle, mark there, and then you come to the line chart. You see, this is a resistance in the market. And then when you come back here, this is a red candle and a green candle. You come to the line chart, you see, it is a support in the market. And together they have formed something like an inverted head and shoulder. So what happens here is, you see the market is clearly going up. It's clearly going up. And this is the weekly time frame. So someone would argue that yes, the market is going up, so we should be looking for buys, isn't it? Because we will trade with the trend. So if the trend is saying up, then we should be looking for buys. However, that is not the case with the alchemy strategy. The alchemy strategy deals precisely with the current price action and into the details of what is really happening. we can be going up, price can be going up, and then we buy, but we end up getting stopped out. I think we can all agree with that. It doesn't mean that whenever we're in an uptrend, we as long as we're in an uptrend and we buy, it is a guarantee that we shall win that trade. No, that is not how it works. You can be in an uptrend, wait for those pullbacks, and buy and still be stopped out by price. That is what they call forex. See, forex is not as easy as it may seem. It is easy when you learn the how it operates and what you should know. Most of the things that you should know in order to start trading, it is easy. However, if you do not learn those things, forex is not as easy as it may seem. That's why some people, they start, then after some time they say it is a scam, because it is not something you're just going to come today and then tomorrow you know everything. It takes time and experience. Time on the charts, mastery, then you can know what you exactly need to do. So now, what do we see here? We see that this is the weekly support that was created here. If you don't see it, just come to the line chart. You see the precision of it and mark it there. And this weekly support has been rejected twice. This week rejected and closed down. This one also has rejected this support and closed down. So now what happens now that we have a rejection here? We mark the week that was rejected. So like I told you last time, when you're marking the week that was rejected, you only mark when the week has rejected and finished. The week has already finished the rejection. Don't mark when the week is still rejecting, or when we still during the week, the week is still running, and then you mark it. When you do that, it can come here, show you that it has rejected on Wednesday. Then on Thursday it goes up to here, closes above, and then on Friday it hits up the top. Or it can show that it has rejected, then on Thursday it comes up down here. So you have to wait for the week to close. As long as it closes like this, now you can confirm your rejection. So after confirming your rejection, mark it. So after marking it, we go to the daily time frame, or we go to the time frame lower, the one that we are analyzing on. Why do we go to the time frame lower? It's because we want to see a breakout on the lower time frame, on a daily time frame, because I'm trading on the weekly, so my lower time frame will be I'm analyzing on the weekly, my lower or middle time frame will be the daily. So we want to see the breakout on the daily. Once the daily breaks out, then that means we are free to look for pullbacks and then enter our trade. So we drop down to the daily. So now at the daily, what do you see? You see a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, and we've made a high high. So now someone will tell you that no, this market it is a bullish market. Why? Because it is making higher highs and higher lows. So it only makes sense that we are buying in this market, isn't it? It only makes sense that we're buying in this market because the market is making higher highs and higher lows. So why would you want to sell this market? Well, that is price action. So now we have reached here. This is where the week ended. 1, 2, 3, 4, 5. This is where the week ended. The other rejection that you've seen. So now that the week has ended, how do we know that we have had a breakout or not? You go to the line chart. Look, do we have a breakout here? Yes, to me it looks like a breakout, because you see this candle here closed above this support, it closed below this support. For me, I would regard that as a breakout. However, we would want to see a more clear breakout. So what do? We wait for the next day. We wait for price to come to the next day. So now the next day is this one. Now this is Monday. This is Monday. Look down here. Monday, 31st March. So now Monday gave us this rejection candle from the down here. It was rejecting down here. You see what I told you, it was rejecting this support. Someone will say, ah, but no, it is rejecting the green candle. Why are you saying? Wait, relax. Come on back on the red candle, isn't it? Now you go to the line chart. You see, marked exactly on the red candle. So now it is rejecting that support there, meaning there is some buying pressure. So what do we do? Remember, the bias from the weekly is that we are going down. And now the daily is telling us, yes, we've had a breakout downside, but there has been a rejection on that candle. So here, now is when you drop, after the breakout, that is when you drop to the 4 hour. So why do you drop to the 4 hour? To look for entries. You see, this is it. So we had higher high, higher low, higher high, higher low, higher high, lower low. We broke the structure here, the market structure, and we formed a lower low. Just wanted to look. Okay, we broke the market structure and formed a lower low. So now what happens? Very simple. So we are almost there to the trade. What happens is very simple. We wait for a pullback. We wait for a pullback in this area here, around here, and then we enter for our short, targeting down here. I will show you where we shall place our targets on the weekly. However, for now, let's first finish this one. So now we wait for a pullback and then some selling pressure, and then we enter. So what do? We wait as price moves on. That one comes, that one also comes. Remember guys, this is not a pullback, this is not a significant pullback. We are still in this area here. We want this to see at least a candle that reaches around here or on this shoulder here to form a head and shoulder, and then we put it down. Right now if you enter, it is just a trap. This is not a significant pullback, so we keep on praying price forward. Now it looks like it has gone down. I don't know, but guys, sometimes you can wait for pullbacks and they don't happen, but in most cases they will happen. And even if they don't happen, don't take the trade, because the only proper way to trade this is when you have a decent pullback. So we keep on playing price forward. Good. It's looking good now. We're going up, we're going up. Good. Now guys, you've seen, if you had sold here, you'd be a little bit in profits, and then you come out, comes back and stops you out. Why? Because there was no pullback. This is not a significant pullback. I know some people would say, now we are retesting this area here. No, that's not how it works. It will have to come at least up to around this zone. You see how it has crossed above here, the support area here. It has crossed above the support area, which turned into resistance. So now we cannot enter from here. We shall wait for some selling pressure, and then we bring it down. So we play the price forward. I think this is okay, because we have rejected up here and now we have closed here. So what do? Since we've rejected up and retested this area, some selling pressure, we enter for sales position now. Target this week. I'm not saying that, you see, someone will say, but now the stop loss is big. Guys, just reduce your lot size and accommodate the stop loss according to price action, not according to what you want or your account. Stop loss should be according to the price action. So just make sure it is above this week, because price cannot come here. If it comes here, that means we have changed the trend. If it manages to reach up to here, we have changed the trend. But in most cases, it cannot come retrace up here. So now that is it. So how do we place our targets? We go back to the weekly. Remember, we are starting our trades from the weekly, so even the targets, we shall get them from the weekly. We shall going to straight to all the way to the next support, which is here. This support here, you see it, this one here. That is where we're going to put our target. Then come back to the 4 hour. Just want, okay. So now we play price forward to see how it is ending. See, just a little boom, and you hit your target just like that. But how has it been achieved? It is just a power of waiting. You see, price did not even try to retrace up to here. The moment it rejected up here, it meant that we are going down. But remember, this one has been in an uptrend. You see how it has dropped up to here. So guys, trading is simple only if you know what to look out for in the market, and if you're patient. You see how we've waited until when we got our entry, and then we smashed. How many pips are these? 405 pips. That is almost 400. That is a 1:2 according to our stop loss, but then it is the pips that matter at the end of the day. As long as you win, you look at the pips. 400 pips. If you have entered the lot size of 0.1, those are $400. 400 easy dollars. So that is all for today with GBPJPY. That was a trade that happened on 3rd of April, and you see how it played well. If you still wanted to hold it, you could have gotten more profit by taking it down here to almost 1,000 pips. Yeah, 950. That's almost 1,000 pips if you still wanted to hold the trade. However, me, I wouldn't hold up to that long. And yeah, that is how the trade has ended. So guys, if you have learned something from this video, kindly like the video and also subscribe to the channel. If you feel like there's something that is lacking, comment there and tell me what exactly is lacking, then I shall be able to help you. Also, if you have not learned and you could go through the video, just watch the video many times. You can watch it like 3-4 times, I'm sure, but this time watch it slowly by slowly in the slow motion. I'm sure you're going to understand the concept. This strategy is very easy. It is one of the strategies I use, and I think you can also use it. So guys, that is all for today. Have a great day.